And Joe, not to get too dark or too sinister here, but I'm making this call from Vancouver, Canada. There's going to come a point in the future where the Fed loses control. It's going to be a watershed moment when that occurs, and that's really for your audience and for my shareholders and for people I talk to. Are we protected? Are we positioned for when the Fed loses control? It's going to be a difficult time. It's going to be a tough time. But if you go back and you study history, for those who had a 10% weighting in a mining stock during the Great Depression, they came out of the other side of it okay. And I've got more of a 10% weighting in some of these, much more of a 10% weighting. Because I hope not only to survive, but to thrive on the other end of this.
What's up, everybody? My name is Joe Brown. This is Heresy Financial, and today I've got a very special guest for you. We've got the CEO of Dolly Varden Silver, Shawn Khunkhun. Thank you so much for joining us today, Shawn.
Joe, thanks for having me on.
Absolutely. Well, right now, we were talking about this a little bit before we started recording. I wanted to bring this conversation up on the show that everything seems like one trade right now. It's either positively or inversely correlated to what the Federal Reserve or the central bank does. It's all based off of monetary policy. So because of that, monetary policy has become so pervasive in all of our everyday lives, making the number one question on everybody's mind: what is the Federal Reserve going to do next? We've got really fragile markets on one side, really high inflation on the other side. In your opinion, what do you think we see over the coming months in response to what's going on right now by the Federal Reserve?
That's a really good question. And my take on it's a little bit different, Joe. For me, there's going to come a point in the future where the Fed loses control. And so I'm not trying to put my finger on when that moment happens, but I think there's this big this misconception that the Fed controls the market because they've successfully over the last decade or so really controlled the narrative, have had everybody focused on their next moves, but ultimately at some point they're going to lose that control. And it's going to be a watershed moment when that occurs. And that's really for your audience and for my shareholders and for people I talk to. Are we protected? Are we positioned for when the Fed loses control?
Yeah, that's a really good point because so far, really since the Greenspan put started, when we saw them try to soften the blow of the dot-com bubble bursting, we've seen they basically had to increase exponentially their amount of intervention just in order to have the same amount of impact on the markets. You went from lower interest rates a little bit to lowering interest rates a lot, plus TARP, plus buying mortgage-backed securities. Then you move from there to bailing out the entire market. You got stimulus checks, purchasing corporate bonds. So the markets have become more and more fragile along the way as they've been more dependent on the stimulus and the bailing out. Do you think next time they have to deal with a crash will be kind of the point of no return, where the intervention that they try is, they've run out of tools and they, run out of control after that?
Yeah, and I think, the other thing is like Peter Schiff talks about, and he makes the analogy to a drug addict needing more and more and more. And I think the big risk we run this time is, we're now contemplating throwing trillions of dollars at a problem, and for what type of GDP growth are you going to get for the amount of money that you're going to have to put into the system here? So I think we're in a very fragile moment. We've kicked the can, and are we at that final moment where the Fed has lost control? And when that does happen, it's going to be a situation where all asset classes fall, and what is going to preserve you in that moment?
Yeah, it makes sense. Well, we've already started to see, like I mentioned, these markets right now are so fragile because they're so dependent on the easy, the cheap money. And so given the fact that we've got such high inflation right now and the expectations for Federal Reserve tightening are so high, markets are starting to fall as a result of that expected tightening. We haven't seen the same thing happen in gold and silver. In fact, we've seen a lot of strength in the metals. And every time the Federal Reserve announces, hey, we're going to speed up the taper, things like that, we've actually seen strength out of metals. So what do you think about that?
Well, listen, I'm not smart enough to know whether whether gold has just gotten ahead of all these moves. For example, gold moving from 1,300 to 2,000, from 2019 to 2020, was gold getting ahead of all the printing and all the monetary policy and all the Fed actions? And is gold already, and gold's correction from $2,000 down to 1,600, had that already priced in some of these hikes? So I'm not going to sit here and try to forecast what gold's doing on a minute by minute or an hour by hour basis. But the way I look at it is, look, even if the NASDAQ or the Dow, pick an index, pick a big US index, were to fall in half, we would still be at levels where we're just getting back to where when Trump took office. We would still be 300% higher to where we fell during the crash of '08. So I still think there's a lot of, people are, focused on the cryptocurrencies and they're going, oh, look at these big declines in cryptos. Well, look at where some of these things are trading, right? And on a relative basis, you look at metals, you look at something like silver down at $23 an ounce. It's trading at half the value of its old high. So for me, I keep it really, really simple. Do I want to be in a bubble asset or do I want to be in sound money? And that's why the decision for me is really simple. And that's why a lot of my portfolio is weighted in gold and silver.
Yeah, that makes a lot of sense, especially taking into account, considering the long-term averages. A lot of what we're seeing right now, these crashes, bear markets, corrections in certain asset classes, it's like we haven't even reverted to the mean yet for a lot of these assets. So especially, in light of the lows from previous crashes.
And Joe, not to get too dark or too sinister here, but I'm making this call from Vancouver, Canada, right? And if I look around here, and if I just look at one asset class, which is real estate up here in Vancouver, and I look at the amount of debt the average Canadian Vancouverite have taken on to participate in this housing market, the average mortgage is close to $1 million. That's the amount that the owner has borrowed from a bank. When I was a kid, I was taught that every once in a while, whether it's 7 years or 10 years, the tables get run, and so I'm wondering if we're in a situation where it's by design that interest rates will go up, and there'll be a great wealth transfer from the masses to the few, to the corporations. Like, who is the Federal Reserve? It's a group of private banks. Is it in their best interests to run the table here?
Yeah, especially when you look at the long-term history, every 7 to 10 years, things from, a crash or recession happens, basically like a healthy fire burning the dead wood out of the forest. And we've kind of seen over the last couple of decades an attempt to stop that from happening. And in nature, we know what happens when you stop those fires from happening. You get a buildup of the dead wood and you burn down the forest, and it can't recover after that from such a large and hot fire. And it's a devastating fire then at that point that can't be stopped. So, the rot, like you mentioned, a lot of the malinvestment that has not been able to be cleared out, the bad investments that have been incentivized as a result of all the easy money. We've built up a lot of rot in the system that, this time might be, a fire that you just can't stop. The table might be cleared. Things might actually burn down.
And there's been a few factors that have made this palatable for the consumer. One of the factors is technology. So technology, has enabled, some things to become more efficient, more affordable. And then, having countries like China or, other parts of the world produce some of the goods that we're consuming, have led for an environment where, despite wages not keeping up with rising prices and inflation, it's been masked. And it's been it's led to an environment where most people haven't really noticed things becoming more expensive. But I think we've finally gotten to a place where, the rest of the world's caught up and the living standards have increased and goods are rising. And that inflation is now coming in at a time where we've got record high debt levels, demographics have turned upside down. I think back to when, my grandparents or my parents were were around and working, and I think about a society where you might have had one person living off of nine people working. That's being turned upside down now.
Yeah.
And it's why you have these big $1 trillion relief packages, with the headline of, hey, this is a pandemic, this is COVID, this is why we need to bail out the system. All these issues were here well before any of these new problems arise. And it's going to be a difficult time. It's going to be a tough time. But if you go back and you study history, for those who had a 10% weighting in a mining stock during the Great Depression, they came out of the other side of it okay. And it was those lessons from history that brought me to precious metals, brought me to mining stocks. And I've got more of a 10% weighting in some of these, much more of a 10% weighting. Because I hope not only to survive, but to thrive on the other end of this.
Yes, exactly. So sound money is something that is really set to shine in the future then, because as things get repriced, as currencies fail, as economic crises take over, what you really want in light of history is you want savings. You want a lot of your portfolio and savings to be able to buy things at a discount when they crash. And saving in something that's crashing like fiat won't necessarily help you. So having sound money to put your savings in, precious metals gives you that purchasing power, that dry powder, that gunpowder to be able to go out and do the things, buy assets on sale, kind of things that as things reset, as we take that to go around that curve. So in light of that framework, mining stocks, they typically react differently than the actual metals do. Let's say 10 to 15 years ago, I know the industry was basically flushed with cash, flushed with capital. It was a cash burning machine though, for the most part, and investors got, typically, understandably, they got burned by that and, stopped pouring money, pouring capital, pouring investment into the sector. But all that has kind of changed over the last decade. And now investors are still very fearful because of that bubble in 2011. And companies have had to change their business plans, business models. And now, for the most part, so many of them are just cash cows. And I've said for a long time, mining companies are probably one of the best buys of the decade, the entire sector over the next decade or more as a result of the macro environment right now. What is your take on that? What is your take on mining, given what we've talked about?
Well, I think, first of all, you've got something that's very hyper cyclical, right? So you've got this feast or famine industry. And the trouble with that is, if we just look at labor, if we look at attracting top talent, the engineers, the geologists, the scientists who are the miners, there's not a lot of incentive when you have an industry where it almost takes all the stars lining up for a mining company to be profitable. And so the challenge there is you basically have underfunded, understaffed mining projects. And so what you described there in 2011 was an industry that was trying to aggressively make up for decades of underinvestment. And so they went out and they made some crazy acquisitions based on the price of gold going from, say, $200 to $1,900 an ounce. They started, evaluating projects and looking at them through the lens of a sustained gold price at those $1,800 or $1,900 highs, which weren't the case. We saw an average gold price of $1,200. So now we're at a state where the large companies are they got their hands slapped, and so they're a little bit skeptical into going into projects. But it's led to another period, another decade of underinvestment. So if you look at something as simple as mineral inventories, the amount of gold ounces or silver ounces or copper pounds that a mining company has on their books, they're at record low levels. So companies have had merged together. You've had some of the biggest miners in the world merged together, and their production profiles are only, merely at the same levels that they were at 10 years ago before those mega mergers. So my point here is how I've tried to profit from that as a CEO, leading a mining company, is I identified a space where, which was a development pipeline. So my goal was to source mineral inventory because I knew that the mining companies were going to be coming for that mineral inventory. The very nature of their business, every day they get up, they're depleting inventory through production. And so, sourcing that next development project is going to become more and more and more valuable. And what we're seeing is big takeovers. Great Bear is a great example of a company that was 15 cents 5 years ago, and they're subject to a $30 takeover today.
Wow.
And so that's a $1.8 billion takeover. They don't have a resource estimate. They don't have a mining permit. It's just potential ounces in the ground, and Kinross is coming in and paying almost $2 billion for that.
Wow, that's incredible. Well, I've talked about this before. I have a portfolio of many different mining companies. Dolly Varden is actually one of them, so I'm a shareholder. And now with you being the CEO of Dolly Varden, what is something that you are extremely excited about for the company? And I know what you have is pretty rare, even just from the standpoint of a pure silver play, because most silver is mined as a byproduct of other minerals like, lead, copper, zinc. So what is something that's really exciting specifically about Dolly Varden right now for the coming future?
Well, I think one of the trends, which is scary, is you've got in places like Peru or Chile or Argentina, you've got these left sweeping governments where the threat of nationalization or higher taxes, and those are some of the countries where, when you think of pure silver mines, that's where you get them. So one of the unique things that's got me excited and confident with Dolly is we're in Canada, so we're in a safe, stable mining jurisdiction. Mm-hmm. We have a high grade deposit. But what's got me really pumped up here, Joe, is we've just acquired a neighboring project which takes our mineral inventory and it drastically increases the size of it. It almost adds 100 million ounces of silver to our existing resource, and that's a big shot in the arm. And it's also a testament to a promise I made to my shareholders, setting certain goals. Like when I took over this company less than 2 years ago, the value of the company was $20 million. And we're on the verge of becoming a $150 million company inside of 2 years. So it's that type of growth trajectory I want to continue delivering on. And if I can do that while silver prices are flat, what can I do if we get the type of run that I think we're going to get on the metals?
Right. Yeah, that's a very good point. Absolutely. Makes a lot of sense. Well, that sounds extremely exciting. And of course, for everybody watching, none of this is investment advice, not a recommendation. Do your own research, all of that. Big thanks to Dolly Varden for sponsoring this video. And again, thank you so much, Shawn, for joining us today, talking. We had a fantastic conversation. I thoroughly enjoyed it. And I'm really excited about what the future is for, precious metals, mining, Dolly Varden specifically. Looking like we might have some hard times ahead of us, obviously, but there's some silver lining there on the other side.
Thanks so much, Joe. Thanks for having me.
Hey, my pleasure. And thank you all for watching. As always, really appreciate you guys. Have a great day.